discussion on a very important topic that we were discussing last time, that is what to invest in right now. This is the most hot question that is being discussed these days, that what are the right options to invest in these days. Yesterday I discussed with you guys about some safe, reliable, high profitable options that are available in market about investment, and I will just repeat for a recap. Those options are stocks, exchange traded funds, mutual funds, bonds, high yield saving accounts, certificates of deposits, real estate, and crypto. So these are the safe options these days. Some of them are with high profit and high risk, some of them with mild profit and mild risk, and some of them are with low or average profit with low risk. So we can see that this is a very common rule, that wherever we have high risk, it, it comes with a high profit or loss probability. So last time we discussed about the stocks, what are the stocks, how to invest in stocks, and how investing in stocks can increase the value of our money by multiple times over a certain period of time. Today we will discuss about exchange traded funds. If we are worried about researching and selecting individual stocks, an alternative is to invest either exclusively or partially in exchange traded funds or mutual funds. This works that if you invest in an S&P 500 index fund, your money will be spread out among 500 companies that make up that index. So if any one of them were to fail, it wouldn't be devastating. So in other words, that the risk of failure becomes low. Similarly, the risk of profit or high gain also reduces a little bit, because the performance of your money depends upon the performance of those 500 or 100 companies collectively. So if the time is good and the most of the companies are in profit or in gains, then your funds will be going positive. And if vice versa, if most of the companies are negative, or if most of the companies are in loss, then your stocks will have the probability to be in loss. So this is all about exchange traded funds. It's a low risk option, but again with the low or mild profit option. The next one is mutual funds. Mutual funds are very much similar to ETFs. The mutual funds, they pool investors' money and use it to accumulate a portfolio of stocks or other investments. The biggest difference is that ETFs trade on major stock exchanges and you can buy shares whenever the stock market is open. But mutual funds only price their shares once a day and aren't nearly as liquid. So you can see that ETFs are more available, more open, and you can buy or sell your stocks anytime whenever the market is open. But the mutual funds are a bit conservative. These are not that much liquid, and you can only buy or sell the shares only once a day when that window will be open. So this is an option as similar to ETFs, but it has a bit average risk, but the profits are also a bit more than the ETFs. So we have multiple type of mutual funds available, and in mutual funds there are multiple categories. There will be a category that will be low risk, low profit, and there will be some categories that have very high profit. If you see on YTD or MTD or 6 months basis, the profit percentage will be very high, but the downside is the risk of loss will also be high. for that mutual fund. So if you are investing in mutual fund, my suggestion is to start from a low risk category, and then you can go upwards towards a medium and high risk and high profit category. So up till now we have discussed three things: the stocks, exchange traded funds, and mutual funds. Now comes our last category for today that we will be discussing, and it's a bit different from the previous categories because the previous categories were somehow linked to the stock markets and the trade, etc. But what are the bonds? So to explain briefly, over the long term, growing wealth is the most important step. But once you have built that wealth and gotten closer to reaching your financial goal, bonds, which are loans to a company or government, can help you stay there. There are three main kinds of bonds: corporate bonds that are issued by different companies, municipal bonds that are issued by state and local governments, treasury notes, bonds and bills that are issued by the governments itself. So these are the three type of investments in bonds itself. There are pros and cons for each of these types of bonds. Like for corporate bonds, these are a bit limited on a small scale. The gain or loss is also, you can say, not that much big in a big spectrum. Then comes the medium range, medium profit category, that is the municipal bonds that are issued by state and the local governments. The organized companies, government companies, government institutions inside a state, those issue the municipal bonds. And the last one, that is a very big thing, that are treasury notes, bonds and bills. So these are the bonds where you can buy from any country, and these are a type of international thing. And the jump and uh, the dip on these bonds can have very high impact on the valuation of your money. For example, if it goes up by very small points, then your money gets up or down by very high percentage. So this is a very big C, that is treasury notes and bonds and bills. Multiple governments, multiple governments and countries issue these type of bonds to attract the investors to invest the money in their bond scheme. Some of the bonds have fixed interest rate. For example, a country offers that if you buy my bonds, we will give you a fixed interest of 15% on that bond. So what investors will do, like for a short period of time, for like 2 years, they will invest some money that they haven't planned to put in some business. They will invest that money there and will get a very easy, sure shot 15% profit from that bond. So bonds are a big game, and governments usually launch these schemes to attract large size and small size both investors from international market as well to invest here. So guys, I am going to end my video here. For any question, you can just write in comments tab. Please like and share this video and subscribe to our channel. Until next time, bye bye.